Hello, this is the Chartprofit video, Friday 6th of May, less than 30 minutes after the open. This from the pre-open, the E-mini S&P. The comment down here from last Friday, 29th of April, and there we were talking about earlier that week, the first 3 days, that the E-mini was not able to generate a value area above 2086, which is up here. It's kind of level up here. And then I said here on the Thursday, a fast move down started from that point of control here. And I said this may be the start of a new distribution. If it is a new distribution, it is a down distribution. And I said therefore I'm cautious here. More important support was down here at 2041, which we've been watching for weeks and calling first level support. And on Wednesday and Thursday this week, we just briefly probed below it, but the value areas were generated above. But as I've said today, pre-open for 3 hours before open today, price was printing below that level, and then following the jobs report, we've actually gone weaker since the open in here. We're just rallying back a little, but this is the important level now, 2041. This may become resistance if we reach it. Obviously, we'd rather see reactive buyers entering here and lifting the E-mini back above that level to close up here somewhere. To see how that plays out for the rest of the day, but price below that level down here is weak price location. So previously I wasn't looking at the long side unless we saw significant buying marked above 2086, considering the weakness and the distribution. If we do manage to print back above 2041 and we see significant buying marked up here, that would be a real positive. Over the last couple of weeks we talked about the divergences between price, which has been heading higher, and our breadth indicators, which have not been confirming that move. This may be just a correction while that divergent plays out. If we see significant selling, that's red on the profile marked below 2041 on the E-mini, that would probably confirm, or rather imply, that we're going weaker. The daily trend, to my mind, certainly in terms of breadth, is still positive. If these two indicators, this one stays above 0 and this one stays above 50, and this one here, which is the 5-day moving average of the net new highs 25 indicator, is just slightly below 0, and therefore on the pulse chart we've just seen that the breadth here has just gone grey, indicating neutral. The other worry, of course, that we have is the momentum, price momentum, coming lower here. This is a very good indicator for divergences, and you can see from this point here to here we have a lower high as opposed to the actual market itself, the S&P, which is at a higher high, and we've here had a lower high. I mentioned back over here when this indicator turned down that it has a very strong habit of getting back to 0 before the momentum in the market picks up again. Sometimes that can turn into something worse, like over here it turned down, about here, we dipped below 0, and obviously later on the indicator turned negative, which is not really what we want, but often it will get back to 0 and then start ticking up again. So hopefully we see this, we see the breadth get back, and we see price back above that level on the E-mini. Right now I'd stay cautious. We watch the sentiment day to day here in the my version of the RIDEX assets ratio. See here on Thursday it was lower at 4.78. It actually reached 5.27 on the 26th of April, which was the highest level since early January. It was just here. So that multi-month high in the RIDEX ratio did correspond very closely to the top, the recent high in the S&P. As I keep mentioning, this indicator is relative to levels that it reached about the same time last year, up above 12. It's quite low, below 5. You'll also notice that when the ratio probed below the October low that it reached in February, that was where the market reversed and went higher. So right now we've reached, in the last few trading days, we've reached a multi-month high, but it's still historically quite low. If we saw a further sell-off and this level here down around 3 was broken by the ratio, that would be sending a strong contrarian signal. To see how the market progresses from here on in next week. Bull fund assets in isolation haven't really picked up much from the February low, so the RIDEX traders not really buying into this rally. And although they've picked up a little this week, the bear fund assets have actually dropped quite sharply now from the February low. I think it's really a matter of watching how the market moves from here and how the ratio actually moves in response. There was a little increase in bearishness in the public poll from AAII this week, but this pretty much, if you look at the 4-week moving average of the net, pretty much neutral. We've been watching the Investors Intelligence poll, particularly the 4-week moving average of the net, which is the black line here, and we were watching this previous peak, and I said a few weeks ago that if that was exceeded, that might be something to focus on from a contrarian point of view. So we have seen that exceeded almost exactly up here, but the bulls have stepped back a bit. Bulls percent was lower at 40.2%, down from 47.4 2 weeks ago. That was the highest bulls percentage since July. So you can see there was quite a degree of enthusiasm and optimism for the market at that point. And bears percent this week was slightly higher at 21.7. But again, look at it relatively up from the previous week's 20.6 bears percentage. That was the lowest since August. Exposure index, the equity exposure of active money managers, comes in at 67.66 this week's. 2 weeks ago the index reached 82.5, that was the highest since May last year, up here. Really not a good indicator when you are looking for tops in the market, as I've mentioned. Down slightly this week, as I said. This is worth reading. This is the Lipper US fund flows. They reported equity fund, including ETF, outflows of 11.2 billion in the week to the 4th of May. 11.2 billion outflow this week to the 4th of May, and that's the largest single weekly outflow since December. You can see it here, this little red histogram at the point here, and it sends our 4-week flow lower. That's the black line. It was lower than that just prior to the low in February. If we see a sell-off, again, this would be a good indicator to watch. Anything below that recent low would be an indication of excessive pessimism at that point. This is another very good indicator for finding bottoms in the market. Okay, quick run through of the major charts. This is the spider, the equivalent level that we looked at earlier on the E-mini at 2041. Comes in here, it's a 5-month at 204.50, this red line. We've dipped below it. Currently the spider is attempting to hold on to that support. Price down here would be really weak. Again, it's quite interesting how levels that we've been following for many weeks have suddenly all come into play at the same time. So the 2-year support on the diamonds, 176.50. Looks like we've been lower today on the diamonds and printing almost at that level. Really like to see price back above here. Same thing on the Qs, 105.13 is the major we've been following for months. It also corresponds very closely to the halfway point of this high. Could be major support, and it's in play at the moment. So early in the trading day here, I don't want to make any predictions about where we're going to end up. Much better to see if price can get itself back above here and print some time. Russell 2000 ETF IWM probed up towards 115.35, which is the major resistance, didn't quite make it, and actually we're back underneath the halfway point of last year's high, and again this does currently look like really weak price location. UK's FTSE 100 still trading at this point. We're watching this halfway point of last year's high, had a little consolidation here underneath it, quickly come lower, relatively a really weak chart on the global indices, and back below the 12-month at 61.39. So again, price back up here next week would be encouraging. The big support, of course, is down here at 58.70. Again on the German DAX, another level we've been watching for months, 97.40 is the major, and that looks like it's very close to the low today, so it's bounced back a little bit. Didn't quite make the halfway point like the Russell here. Certainly would not want to see this chart breaking down below that level. Here at TLT, the T-bond ETF, from the high over here last year to the low, and the halfway point in here, and just about all the price action in the last 3 months has been above that level. We had a 6-month point of control up here somewhere, actually 130.78, and that fell to 128.47 with this price action here. This is actually the 7-month 128.47, so significant. Don't really want to see price now back below here, certainly not back below that half, but currently it's in a strong price location. And from my way of looking at things, if it could climb above this minor half here as well, so kind of above 130 in here, that would put bonds in a really strong position, and you'd expect that kind of move up. Now that may happen if we see further weakness in equities, so again that's a good level to watch. We're doing that in the pre-open. GLD, the gold shares ETF, remains in a strong position this year. It had a strong rally from the start of the year. The major point of control was just here at 115.50. We made the low. This price action here lifted that major to 118.22, and then we had a kind of minor little pattern above that, and we're now out to a new high for this move, and I'd say it was strong above 118.22. Again, from the start of the year, USO, the oil fund ETF, or from February at least, has rallied. It did the best thing off that low that it could. The 6 month was at 9, just above 9. Actually came down, made a higher low on that level, which was just below the halfway point off the low. Really strong support, as we said at the time. It's rallied back up out to a new high here, and now what's happened is that a 6 month point of control has migrated higher just in the price action over the last few days to 10.78. So this is a really important level now for this chart. Price holding that level from here would be bullish for oil, and considering the ongoing correlation between equities and oil, that would be a positive for equities as well. So we watch this level, and we'll watch it in the pre-open. And just as an aside, many times I've seen this, you get a rally off a low to the first high, you see the decline, we come back, we consolidate, and the point of control moves to that level. I think it's interesting rather than useful. Seen it on the downside as well. We'll have a close look at the dollar index, then I'll zoom out. This 2-year moved lower, if you remember, just a couple of weeks ago in this price action across here to 94.79. We are rallying back a little bit here, but this will be very clear resistance if we see a continuation of this rally off the low here. And here, just zooming out, you can see that just over the last few days we've seen a probe below that August low, which right now looks to have been rejected. Sometimes the market will break and then we'll see the rejection of that break, and that can lead to quite a strong move in the other direction. But personally, I'd be looking at price back above 94.79 before looking to anticipate any further strength. This is the Euro FX chart, almost the flip side of the dollar index. We've got the 3-year in here, and then we had a kind of higher low on that level, which can be a strong pattern. And as long as the chart remains above 111.98, I have to assume strength here. Okay, we noted a few weeks ago that the Aussie dollar had probed up here into its 2-year, which was rejected, and then we had a consolidation here back below the major, and we're now in a really weak position. There is obvious support of this major low here at the start of the year, just below the current price action, so it's the half from here to here. As we just saw on the USO, on the oil chart, it can be powerful support when you see a chart rally off a major low. It's going to turn around and continue this trend. This would be a good point to do it. Price below here would be extremely weak and give a very different signal. Should always look at this support though off a major low. This is the British pound. After a long downtrend, it's possibly in some kind of basing pattern here. We've got the Brexit worries over the next month, possibly that and the strength in the dollar responsible for this recent sell-off over the last few days. In the longer term, as long as it holds above that 8-month at 142.60, it's in strong price location. Okay, I'm going to finish with this. This is a short time frame, our sampling rate, but a major distribution for the E-mini, and we're looking back here beyond the start of the year. If you remember, we were monitoring this major distribution, and it was giving signals that it was just about complete. I said that this point of control that was emerging, or had emerged here, was in exactly the right place to satisfy the distribution, and that we would likely see a directional move after this consolidation, and so we were in here. I said the likelihood was that it was going to be higher, but I really had no idea at all. It was higher, and within this move from the low here, there's been a number of minor distributions, but we know the point of control, the controlling price, has emerged at 2041, and I've been projecting targets from that once it's established. Initially up to 2090, which was hit, and then we were talking about 2120, which is up a little higher, up here somewhere. I talked about a worry last week on Thursday. That sharp move from 2086 down had started a new price distribution. It looks like it did, but I think that's on a minor time scale. We're looking at a much bigger time scale here. There's two levels here which might attract price, and they'd possibly be a worry. One is 2028, so if the market comes lower and does this, that would change things. Or 2056, if we rally back up and put time in there, it may lift or lower this point of control, and that may change any idea, or it would, about projecting a high up to 2120. In any case, price below 2041 is weak. And I couldn't look at the long side of this chart unless we cover that 2041 level today and print some time over the next few days above that level, but basically I remain cautious. Okay, that concludes today's video. Once again, I wish you a good weekend and thank you for watching.